Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. As promised, we're bringing on an extra special guest to talk about something that I don't know anything about, and it is a long-term friend, Mr. Dan Bird. How you doing, Dan?
I'm doing great. How have you been?
I've been doing good, man. So thank you very much. Video number one, we introduced Dan Bird. We talked about charts. We talked about a lot of macro stuff. We also highlighted that you now do this at about 20 minutes a day. So I thought it was very important in video number two, just to give people a taste of what you do on an average day. Does that sound good?
Sure.
Awesome, man. So why don't you take over and we'll see what you do every day.
All right. I'm going to share my screen. I use stock charts. I use a couple of different platforms, but stock charts is where I put most of my charts. We talked about charts last time. Some of them are very complex. I talked about the fact that charting is sort of like learning a language.
Yep.
And then once you're immersed and you learn it, you don't have to interpret it any longer.
Got it.
You can just look at it and understand what it's telling you.
Uh-huh.
But two things I want to point out on this one. This is what I call my sentiment chart. So what's the sentiment of the market? One thing I'll point out down here.
Now, I'm sorry, just so I understand the vocabulary. When you say the market, is that the Dow, the NASDAQ, the S&P, or is it all of that? Or who's the market?
It's basically all of that, but I typically use the S&P.
Okay. All right. Just curious. All right.
Yeah. And in fact, this is the S&P down here in the blue shaded.
Oh, I see it now. Yep.
So you can see how it's going up. The pieces up here, I'll just touch on them briefly, but the green line is a bull bear sentiment. This is a weekly survey that's sent out to all traders, hedge funds, mutual funds. You know, what do you think? Are you a bull or are you a bear?
Okay.
Right. And it just maps that. Right now, most people are in the lower end of this. You actually don't want it to be at the high.
Interesting.
Because if you think
that's the whole greed versus fear factor.
Well, think about, you sort of have to understand the psychology of the market, and we'll talk about this on another video, but think about how if everybody is buying, everyone is bullish, everyone is positive, everybody's buying at the top, nobody is selling.
That is a sign, or at least one of many indicators that you might want to lighten your load.
Exactly right.
Okay.
Because when everybody is buying and nobody is selling, then whenever the selling starts, it's like trying to get out and exit in a
single exit. Yeah. Oh, I got you.
Right.
All right. Makes sense.
You want to try to understand that before that happens. Now, again, we're in a secular bull market, so the market just continues to chug higher. This blue shaded area, the blue line is the 50-day moving average. You can see that ever since that COVID crash, it's pretty much hugged that 50-day all the way up.
I'm with you. Okay.
The other one is the black line, which is, and I'll show you a chart I always look at, which is the VIX. The VIX is the volatility index,
which is what options trader use to set premiums.
Options traders use that to set premiums, and it's called a fear index.
Yeah, correct.
Because when the VIX starts to go up, like here's the VIX during the COVID
peak
crash,
fear,
right? Yep. Peak fear. It can also be an indicator of when we bottom.
Interesting. Look at that. So
the VIX doesn't go up forever, right?
Oh no, yeah.
But it was up a lot right there. And then the red line is the put call ratio. So the number of traders that are putting on puts, which means they're banking the market's going down.
Okay.
And the numbers that are putting on calls, which means they're betting the market's going up. The ratio between those.
All right. So
and again, if there are more puts than calls, if more people think the market's going down, then that's a good time to get in.
Okay. All right.
So
okay.
So it's counterintuitive.
All right. And again, you're looking at this kind of this is like your first thing you look at in the day.
I'll just look at the right-hand side of this
to
see where we are right now.
And that's what you got carved off on the right side there.
Right. And the red line on this bottom one is the percentage of stocks above their 50-day moving average.
Oh, look at that.
So how many stocks are above their 50-day? So this again is an indication of the sentiment of the market.
Interesting. I would not have expected. Okay, that's cool.
And when more and more stocks fall below their 50-day moving average, again, this is a leading indicator here. You can see it started going down here, but the market continued higher right here.
Yeah.
But this was like the support line down here. So when this gets down to this red area, that's a good time to get back in.
Interesting. Okay.
So you can see right here, it made it way down here at the beginning of December. And then it came up and came back down again.
Interesting.
And then the one at the bottom, which is always an interesting one to look at, is growth versus value stocks.
Okay.
So growth, if the market's going higher, growth stocks will do well. If the market is getting ready to correct, and actually usually in December, when a lot of the big funds start to rebalance their portfolios, they normally buy value stocks.
Got it.
So that's sometimes where you'll see it as well.
Okay.
So you can see during this big run up after the COVID crash, the growth stocks were outperforming. That's the way to think of this.
Okay.
It's growth versus value. So it's growth divided by value.
Got it.
So when it's going up, that means growth is outperforming value. When it's going down, that means value is outperforming growth. And you can see here sometime during the summertime, until the summer, value was in favor. Since the summer, growth has been in favor.
Okay.
Even though we've had some hiccups along the way, in general, growth stocks are continuing to perform.
Okay.
I think growth stocks, once we get through this period, which might be sometime in January, and the market has digested inflation, growth stocks are going to become much more in favor, and they will, I think, will scream higher.
Interesting. Well, that's certainly what Kathy Wood is betting on.
Yep.
Okay. All right.
All right.
Yep.
Let's see. Another one that I like to look at. This is discretionary versus staples. Again, discretionary is a category or a sector for growth, and staples are things that you have to buy.
Yeah.
Food.
Doesn't matter. Yeah, exactly. Yep.
Right. Doesn't matter if the economy is in a recession or not. You have to buy them.
Yep.
Anyway, toilet paper, things like that. Those are all staples.
Got it. Okay.
Right. Discretionary are things you don't have to buy, but when the economy is doing well, people buy them anyway.
Yep. Consumer spend. Yep.
Exactly. So this again is a ratio between the two. So when this is going up, then discretionary is outperforming. When it's going down, then staples is outperforming. And you can see staples from December until the Santa Claus rally.
Interesting.
Right. Staples was outperforming. And ever
Okay.
since then, the last 2 weeks, discretionary is starting to come back again.
Interesting.
All right. So that just again gives me a sense for what the market is doing.
Okay.
The one that I wanted to show you before didn't have gold and bonds on it. Here's that same chart now, bonds and gold and the core CPI. So you can see core CPI screaming higher.
Yeah.
But 10-year treasuries, bonds.
Gold's just a yellow rock.
Gold is neutral. In fact, if inflation was a concern, gold should be going higher.
Well, that's an interesting theory. Well, so that's actually interesting. One of the things that I'm wondering, Dan, is did Bitcoin replace gold? Because again, we have this whole new generation of investors, millennials, for example. Maybe the yellow rock was the baby boomers hedge. Maybe today the yellow rock's not a hedge for millennials. They've switched to another alternative. I don't know.
That is quite possible. I'll show you another chart that I look at on Bitcoin. Bitcoin's very interesting from a chart perspective.
Yeah, because I think we are seeing I think one of the things we're seeing is a fundamental change in what people are using as inflation hedges.
Yeah, that's probably true. I mean, bonds are neutral.
Yeah, exactly.
So bonds aren't going anywhere. Usually bonds and the treasury are inversely related.
Yeah, because if inflation really was a fear, then Peter Schiff or whatever his name is would be right. You should have bought gold 5 years ago. It just hasn't moved. In fact, I think it's down.
It is. You can see right here. You see that gold line is trending down.
Yeah, it's pretty crazy. Okay.
Since you mentioned Bitcoin,
sure.
Here's the Bitcoin chart. I'm going to zoom in on a part of this because I did this. I put this in LinkedIn and I also did it in my newsletter. I usually put Bitcoin in my newsletter.
Okay.
Not every week, but occasionally. I'm going to change this to a 4-month chart, and I'll show you where the buy and sell points are for Bitcoin.
Okay.
So what I said last month or something when I posted this chart, I said Bitcoin has been very consistent. You could buy when the 8-day or the 8 exponential moving average So an exponential moving average is different from a simple moving average
Okay.
because it overweights the last couple of days.
Oh, interesting. Okay.
So it shows the movement sooner in the last few days.
Yeah, I haven't.
Whereas,
Okay,
where,
that's new to
where
me.
a simple
All right.
simple moving average is just
Right.
straight, moving
Everything's
average,
equal.
right?
Yeah.
But this will overweight the last couple of days.
Interesting. Okay.
So the pink line here is the 8-day. The blue line here is the 21-day. And what I said was, and I showed you the 1-year chart of this, and it was very consistent. I said when the pink line crosses the blue line, and the 8-day crosses the 21,
Yep.
and price is above the 50-day. 50-day is this dotted red line right here,
All right.
and that one is a simple moving average.
Yeah, makes sense.
50-day.
All right.
All right. So when those two things happen, you can buy. Now, in this case, the price went above the 50-day a day before the 8 and the 21 crossed. But that was the buy point. So you buy there, you'd ride it up, waiting for the 8-day to cross the 21 again, and then it happened right here.
Interesting.
So there's your first signal, and then you wait for it to close below the 50-day. You could take it right at that signal if you wanted to. You want to be aggressive, but you wait for it to close below the 50-day, and the sell. There's the sell right there.
Couple days later. Okay.
And then you ride it down, and you wait for the 8. And this is what I posted last week.
So has it recrossed? It doesn't look like it's quite crossed yet.
It hasn't, but last week it was right there,
Got
right
close.
on the verge.
All right.
And I said the 8 is getting ready to cross the 21.
And got repelled.
Remember, that's your first buy signal.
Right.
But also remember, I said you can't buy until the price gets above the 50.
Yeah, and it wasn't even close, or I don't know.
Right. It
Close.
wasn't even close.
Yeah.
And they never crossed.
Mm.
So I said it's close, but it's not ready yet. It's not time yet.
All right.
And that's exactly what happened. It started coming back.
I look forward to this. Okay, cool. All right.
And here's a negative divergence. I love these negative divergences. I talked about this on our last session, but you can see the RSI. This is the relative strength. This is the relative strength of Bitcoin compared to the rest of the market. You can see relative strength is moving down, even as the price is basically, it hasn't moved up, but it's staying level.
So just so I make sure I understand this context, basically you're saying Bitcoin has become less strong compared to the overall market. Again, the S&P.
That is correct.
Okay.
Right in here.
Right. No, right.
That means the momentum is waning.
But what I also see you saying on the other side is it might be, I don't know what you call it, a base or building positive divergence.
Yeah, there's a positive divergence here. So the price is moving down,
but getting stronger
while relative strength is moving up.
Interesting.
It probably is going to bounce right around here, around 45,000, or maybe right about where it's at now. I don't know what it's doing today. Actually, this is what it's doing today. That is today.
Yeah, you just reset the chart. Yeah.
So it's actually moving up right now.
Okay. Yeah.
So it probably is going to bounce and come back up, and then we'll watch.
Yeah, it's up today. It's up.
Yeah,
a quarter of a point.
The 8 crosses the 21, but I mean, if you're really aggressive, you could buy it here, but it hasn't really given buy signal yet.
Okay, cool. All right.
All right, but that's just an indication of some of the things I look at.
All right. Anything else? Any other favorite chart? Again, you're doing this in about 20 minutes because you've been doing this so long.
Because remember, I can glance at this and I know what it's telling me, and I move on to the next one.
Right. No, of course.
Right.
Again, back to your example of learning French, right? You're no longer doing the conversion. You just understand.
Right. Yeah, it's taking longer now because I'm explaining the conversion.
Of course. Thank you. I appreciate that. I'm slow.
Not to you, but to everybody. I mean,
no, it's good.
A lot of people, even people that get my newsletter,
I don't do it.
Yeah, it's really good, but it's way over my head.
Yeah.
So I put a lot of charts in there, and I try to explain it so to help people learn and understand it. And if you just keep looking at them and watching them, you start to understand it too. But this is the VIX.
Okay.
We talked about this before, volatility index.
Yeah. One of the questions I have for you. So again, you're looking at this daily. You're doing a newsletter on Saturday. How often do you place a trade?
It depends. I've got 3 portfolios that I trade.
Okay, so go ahead.
I have one that's my stock is my taxable portfolio.
Okay.
Which I put longer term trades on.
Okay.
In that one.
Makes sense. Okay.
Like Ford. I'll show you that in a second. The other one is my trading account, which is more medium term.
Okay.
Maybe a week to a month, let's say.
Okay.
That's in my IRA
Makes sense.
because there's no tax.
Tax,
conflict.
yeah, tax
The
friendly.
third one is a futures account.
Interesting.
And my futures account is my income generating account.
I like it.
That's
Okay.
where I trade futures, and I may or may not do that every day. Depends on what the charts look like, what the market's doing.
Yeah.
And my goal is to make 1,200 a day and stop.
Okay.
That's
Wow.
that's
1,200 bucks.
that's 300,000 a year. It's 250 trading days in a year.
So I'm trying to relate what you do with what I do in real estate, right? We both invested time. We've learned French, going back to video one. We understand that language. We both spend 20 minutes a day, maybe 30 minutes if a lot of new listings or variables change, but it's efficient for us now. And again, right, when basically for me, like when I get the variables that match, I write an offer, just like you, right? When something,
yeah, that's right.
You just, it's not, what I'm trying to get to is it's non-emotional for you.
Exactly right. We'll talk about that in the evolution of a trader. We'll talk about the emotions and how to take out the emotions.
Mm-hmm.
And I'll show you how I do that.
Okay.
That actually gets to actually placing the trade, which we're not going to talk about today. But
right, of course.
Actually placing a trade, there's a whole process around that as well.
Okay. Any other last minute charts that you would look at?
Well, the VIX here is the volatility, the fear index. I've created this with a 5 and a 21-day moving average. So when it crosses, so right now the VIX is way down.
Okay.
What that's telling us is the market is, it's in a Santa rally. The market is calm. When it gets below 17, it's actually time to start being concerned. But in this area right here between 17 and 20 is actually the sweet spot.
Do you actually look at volume? Because I'm guessing this week's really light.
Oh yeah, this week is very light for volume. Yeah. Let me just show one of my charts. Let me show Ford.
All right.
Chart. So here's Ford. I love Ford.
Why?
For a number of reasons. We can talk about this on another one if you want to.
Sure.
Because of the fundamental change that is about to occur across our lifestyle, our culture.
Okay.
That will change everything. And Ford is going to be right in the middle of it. In fact, may even have more potential than Tesla.
Wow, you just pissed off half the audience. I don't know. I'm just kidding.
I'm not saying Tesla doesn't have potential.
No. I was trying to be funny because everybody seems to want to trade Tesla back to hold and diamond hands. Everybody talks Tesla. Nobody talks Ford. So again, why do you think Ford's sexy?
Ford has made it known very clearly. They've actually said this, that we will be the #1 EV car manufacturer. Yeah. They already have EVs on the market. They just stopped taking orders on their F-150.
I saw that. Yeah, I saw that.
Right. So for a lot of different reasons, and it goes beyond just electronic vehicles. It goes to self-driving. It goes to AI. It goes to a lot of the technology that you and I know a lot about.
So in this example, back to your 3 accounts, this is in your long-term hold account?
Yeah, this is long-term hold.
Got it.
Right now it's going sideways. So if it's in a sideways channel with the support or the resistance level at 21. If it breaks above 21 with volume, there's the volume. So you can see this week's volume. It's really
pretty weak.
Right.
Yeah.
If it breaks above 21 with volume, it's going to go much higher. And I think it's going to go much higher.
When did you, does this chart show when, I'm guessing you got in, or maybe you built a base over time?
It doesn't show when I got in, but I get in back or when it broke out of this one right here, right at 16.
All right.
So I broke out. I got in right here. At this,
now, when you get in, do you get in with like one commitment, or do you build a base over multiple days, or how's that work?
I build a base. I usually will buy a quarter or a third.
Okay, so you do have
just to make
strategy.
sure.
Yeah.
And another strategy that I'll use is like marijuana stock, for instance. They're starting to look interesting again.
Okay.
But I wasn't convinced that they're ready to move. So I bought 3 of them with very small
tranches or whatever. Yeah. Okay.
And I'm just going to watch those. And 2 of them have already stopped out. We'll talk about stops later.
Okay, cool.
2 of them have already stopped out. So I didn't really lose very much. The other one is still hanging in there, actually doing pretty well. So I might go more. So that's a stronger one. But that's one of the ways I do that. So
very cool. And then
and then
go ahead. please.
Just to look at the S&P. Again, this is the S&P, and you can see the volume here. See the volume this
Yeah.
last week.
It's pretty light.
Yeah.
Or
really
lower. Yeah. Which is to be expected. You can predict that every year.
Yeah.
Yeah. Okay.
So that's kind of my routine. There's a lot of other things that I look at, but
very cool.
Yeah.
I guess the final question, you had a goal of making $1,200 a day. How long have you been
Yeah.
doing this full time? Only 3 or 4 months, right? Or 6 months maybe?
I retired in August. Right.
So have you hit that? What, 50%, 70% of the time? What
50%. I just really started focusing on it
Mhm.
probably 60 days ago.
Okay. All right. So
Some days, and for that, it's very precise. Futures are very precise.
okay.
You absolutely have to understand charts to trade futures,
Got it.
because you can lose a lot of money really fast.
Really fast. Very, very cool.
Yeah.
Well, thank you very much for doing this. Yeah, there's so much here. We're learning French, my audience is, because again, I don't talk charts, I don't talk stocks. So again, it's going to be very slow for us, but Dan's going to come back every Saturday, folks, to give us more and more. And hopefully we will start understanding again French here in the next couple of months together. Any closing thoughts?
No, thanks for having me. I think
Absolutely.
I don't know what the next topic you have in mind for, but
Yeah. Thanks, buddy.
we'll do something else.
There
Thanks.
you go.